Okay, we should be good now. We should be good. Volume good. Sorry about that. I think it should be good. Let me make sure on my end. Microsoft apparently missed badly, so we're going to talk about it in a second. Okay, it's good. It's good. Yeah, apparently you have to put in a microphone in order for it to work, and if you don't do that, it doesn't work. Okay, so here we go. CNBC, this is what we got. Here it is. Earnings right now immediately. Boom. Are you guys ready? Let's share this bad boy. Here we go. Okay, Microsoft earnings are out. Here are the numbers. The company did $2.23 per share versus $2.29 expected. Not too bad. They fell 3% after hours, $51 billion in revenue versus $52 billion. That's not that bad. That's not that bad at all. Microsoft reduces quarterly guidance for income and revenue because of changing foreign exchange rates. That makes sense. CEO Nadella said employees will get pay increases. The company introduced services to help customers deal with security incidents. Gartner said this month that logistical disruptions in the quarter had dragged down PC shipments. That also makes sense for why Microsoft probably fell down. They've sold off 25% over the year. Okay, let's get into where the stock price is then right now. Hold on. I'm pulling up Webull, and I'm also pulling up some of the other stuff. Turtleneck and chain. Can you imagine making 51 billion in a single quarter? It's insane. Yeah, that's absolutely insane. So let's pull up Webull. Let's see how Microsoft's doing on that end. So Google is up 4% after hours. Okay, so Google also came out. All right, so before I get into Webull, let's go to Google. Let's go to Google earnings. Google earnings. This is the one I really care about the most. This is the one I want to look into. Where is it? We need the numbers. Oh, here it is. Okay, here we go. Let's share this one. Google misses on EPS. That made sense. That's what we thought was going to happen. It's up after hours. That's if you bought at 104, you probably are up a little bit at 109. All right, let's see what we did. 1.1 versus 1.28 expected. Oh, wow. Rev is 69. Rev was pretty good. Look at this. 69 billion versus 69.9. They basically met on Rev. I mean, they missed by very little from this. Markets are going to rip the rest of the week. I bet Google and Microsoft are the big ones. Interesting. Okay. YouTube advertising revenue is, well, so these things haven't come out yet. So we're still going to be looking for, so ad revenue on YouTube, 7.5 billion, Google Cloud, 6.4 billion is what is expected. And then their traffic acquisition cost, 12.41 billion. So they're expected to report a slowing revenue growth of 13% from 62 a year ago. Wow. Expected to report a slowing of revenue growth of 13% from 62%. That's obviously when the company was pulling out of a pandemic and the economy was flourishing, but goodness, 62 to 13. I mean, you'd imagine like the stock price go down. I just got the CNBC notification. Microsoft misses on top and bottom lines. Okay, so we still got to wait to see the good, juicy report for Google as well. 69, nice. Yeah, that's funny, right? All right, let's go into the stock, the Webull thingy, and let's see what's going on with Goog and Microsoft. So let me share my screen right here. All right, here we go. So let's first go to Microsoft. 251. So it's down 3%, down 1%. Now, that's not crazy to be down 1% in after hours. Like, that's not insane. Obviously, for the day, it dropped another 3% during the actual market open. So as a result of that, being down that much is not that insane. Microsoft missing on top and bottom lines and not selling off tremendously, I think is actually good. 51 billion in revenue is insane, bro. In one quarter, 51 billion one quarter. Like that's not easy to put up. And you would think with everything that's going on, to be able to do that, that's still pretty good. Okay, so let's get into Google then. What do we got on Googs? I have not bought Google yet. I've been waiting below 100. It's at 105. It was just at 115 the other day. So earnings popped it up 3%. That's not that impressive. And granted, it's hard to imagine Google going up that much more given everything that's going on right now. So 105 popped up 3% to 109. It was at 115 the other day. That's when my dad started buying it. I was like, Dad, why are you buying it today? It's too expensive. But that's what we have. This doesn't look bad at all. Yeah, I agree. I mean, this is really not bad. This is for big tech, for the start of big tech earnings. We haven't seen Apple, Amazon, and Facebook yet. Facebook's tomorrow, Apple and Amazon on Thursday. I mean, it's not that bad. That's not much of a miss for either. Markets are expecting hurricanes, so if we get scattered showers, it's not a big deal. I agree. Like, I mean, imagine if Google, they were expecting 69 billion. Imagine if Google pulled in like 64 billion, right? And they were down $5 billion. Then you could talk about a miss, but they barely missed on revenue. I mean, this is reaffirming the sort of thesis that I have on Google, which is it is one of those businesses that is so vertically integrated across what they do and how they keep you within their ecosystem that it's difficult for me to imagine that they disappear, right? Primarily also because of search traffic as well. Enphase reported. I didn't even know Enphase was doing earnings. Okay, let's go to the stock first before we get to the article. Enphase is one of those ones. Let's see, is it up or down? Is it up? Wow, look at that bad boy run. So Enphase, for those who don't know, this is an incredibly interesting stock. One of my boys, I call him my boy, but he's Vitaly. He's also investing in my startup. He told me the day I had dinner with him to go to see if he wanted to invest. He told me, sitting in his Tesla, we were sitting there. He's like, "Are you in Enphase?" I'm like, "No, I'm in Palantir." He's like, "Screw Palantir, get into Enphase." And he ended up selling all of his Palantir to buy Enphase. Now, obviously, I'm not going to do that because I just have more conviction on Palantir. But he was telling me to get into Enphase around 180, but he said 180 is a little expensive, but it runs up and down really quickly. Enphase, for those who don't know, they don't make solar panels. They make the inverters that go underneath the solar panels. This is a fundamentally different business. There are no margins on solar panels. Solar panels are a commodity, and China's making a bunch of them. You don't want to bet on solar panels. You want to bet on the tech underneath the solar panels, along with the macro thesis that only 1% of US households have solar panels. And that's even worse globally. So from that perspective, Enphase is just an incredibly attractive stock. It's up 5% after hours at 227. Now, if the macro declines, I think Enphase is one of those stocks that it's also going to decline with it, but Enphase runs up and down very, very quickly. And they are a grower. I mean, these guys grow really well. So it's going to be interesting to see how they perform over the long term, especially with the macro getting better. But things are not going bad. I mean, Google's up 3% in after hours. Microsoft is down, but not down that much to the point where you would get concerned. And Enphase is doing up. Someone said Visa beat as well. Let's look at Visa. Visa is also up $5, 3% in the after hours. Very interesting. You know, it's so funny to me how a lot of people thought decentralized finance was going to like destroy the behemoth that is Visa and MasterCard and American Express. It's like decentralized finance doesn't even have infrastructure yet. I mean, it's got to be, and those startups are getting funded and being built and right, all that stuff, but that's going to take a long time before, you know, everyone's debit card goes away because that's decent on Visa. Now I'm going to try to see if we can get some actual reports. I don't know if they're going to release the reports right now or not. Lithium is up after hours as well. If Visa be, that should be good for PayPal. Theoretically, yes. Visa is also so big, so retail sentiment is bad. But see, it's weird because Walmart is dictating that consumers aren't spending. Shopify, so it's so weird, right? Walmart's saying, hey, we have inventories, people aren't buying shit. And then Shopify's like, hey, people aren't buying stuff online, which is why we have to fire 1,000 people today, right? So that's a difficult decision you have to make as a company, but you have to make that decision. So Walmart's like, okay, inventories are stacking up. People aren't buying stuff in stores. Shopify's like, actually, people are going out into stores and they're not buying stuff online, which is like what's going to happen to Amazon. Also, what's going to happen to Amazon if Walmart has excess inventories. That's like a double-edged sword for Amazon. But then on top of that, Visa's about retail consumer spending. And it's like if people are using their cards, I mean, maybe it's not just to buy things in big box retailers or online and maybe for other use cases, but you would assume macro level that retail sentiment is going down. Additionally, the consumer sentiment report came out today, and it's the lowest levels it has ever been since 2008 for the month of July. Which means consumers aren't spending, right? Demand is not there. People do not want to buy things. Because probably people are, scared. They're saving up their money, things of that nature. People swiping up their credit cards is exactly good for macro. That is also true. Consumer credit card debt is, I don't know the exact numbers, but it's at levels that it hasn't been in since the pandemic as well, which means consumers have, obviously got a lot more debt. The buy now, pay later stuff has led to this as well. So it's going to be interesting. These reports seem to give me the Fed free range pistol whip us later. Yeah, I think 75 is pretty guaranteed. I mean, it would be really difficult to imagine that we don't get 75. We just got YouTube ad revenue. Here we go. We got YouTube ad revenue. This is the one I wanted to see. Here we go. CMG. We're going to check on CMG in a second. Let's look at Google. Okay. YouTube ad revenue, 7.34 billion versus 7.52 billion. Cloud, 6.28 versus 6.41. That's not that bad. That's really not that bad. I mean, that's a very small miss to put up 7.3 billion in a world in which Snapchat can't stay above $10. It just shows you the level and it legitimizes the validity of YouTube as an advertising mechanism and a content distribution platform versus something like a Snapchat, right? And Snapchat has its own time and place, but Snapchat's not YouTube at the end of the day. Google Cloud revenue, so we'll talk more about YouTube in a second. Google Cloud revenue up 6.28. So people thought it would grow 37.9% to 6.41 billion, which is lower than the 52% and 46% and 47% they put up in the previous quarters. So it's lower, but 37% quarter after quarter is still pretty good. I mean, 37% growth is not horrible. They missed on that, so it's probably like 36%, 35.8% at 6.28 billion. That's not bad either. I mean, this is not a bad quarter. Anyone that's saying this is a bad quarter is not looking at the numbers. I don't think anyone can say that. Google stock went to 107. It's up barely after hours, about 2-3%, nothing crazy. It doesn't make you want to buy the stock necessarily, but it doesn't make you want to sell this. I mean, I'm still waiting for a better price on Google. I think DCAing is fine on this, but I think Q3, Q3 is going to be important because maybe they got into, what they were able to do during this time. And then Q3, we're going to see what else happens. But they escaped Q2. I mean, the problems that Walmart and Snapchat are dealing with, they were able to escape it. 7.34 billion on YouTube ad revenue. Let's go back to Webull real quick and we'll check out CMG. That's a lot of money in ad revenue. I mean, that means creators are getting paid on YouTube still. Like the creator economy is not suffering from that perspective. So let's go to CMG, Chipotle. Wow. Oh my gosh. Chipotle's up 8%. This is one of those stocks. Tell me I'm not alone, but you have to tell me I'm not alone about this. When I saw Chipotle like $1,000, I think a year ago, I didn't understand it. I was like, it's not a tech company. Like it's freaking Chipotle. Like, why is it at 1,000? That's insane to me. Like $1,000 for Chipotle. That doesn't make any sense. But apparently it made a lot of sense to a lot of people. And Bill Ackman, I think, was one of the first institutional investors to get a lot of money into Chipotle. So this is interesting. Okay, so let's, I'm going to try to find Chipotle earnings as well and try to see what we've got here. Chipotle earnings. And while I'm doing that, let's go to Google and see how Google is doing. Google, here we go. 105. Okay, 108. Yeah, I don't think the quarter is bad for Google. I think the quarter's fine. Microsoft at 251, 249, barely any movement. Enphase up 5%. That's great. Visa up 2%. And Google up about 3%. I mean, so far, the whole world and the whole economy and the whole stock market, all of FinTwit, right, has been concerned about how earnings are going to screw up a lot of stuff. So far, it has not proven that to be the case. It has not. Things have been pretty damn good from Google and Microsoft. Now, Facebook, but the thing is, if YouTube's ad revenue is 7.32 billion and they barely missed, and Facebook can't put up similar numbers, they're expecting 28.92 billion. Well, then we're gonna have an issue, right? Because that means people just genuinely aren't watching it or aren't using it, right? And that's obviously not good for Facebook if they're just not using it. So that's gonna be interesting. But if YouTube is able to put up 7.3, it's going to be hard to imagine Facebook. Like, these are things that are macro, right? Like, if you're a company and you have a budget, a lot of times you're spending on Google and Facebook at the same time. So if Google's able to put it up, that means you're spending on Google. You're likely to spend on Facebook unless you're shifting everything to Google, which I don't know if exactly that's going to necessarily happen. 75 bips is guaranteed. The question is if they will go higher than that. I don't think they will personally. Yeah, I don't think so. I think 100 is going to spook the market. I think they're going to make everyone really scared, and they're probably not going to want to do that. It doesn't seem like you need to either. And I think you need to see the next inflation print, because this inflation print made everyone think, okay, they're definitely doing 100. But then the entire narrative shifted to this is definitely a peak. And if it's not a peak, and I know we said 8.6, 8.8, 6.7 was the peak. If this one's not the peak, then we've got an issue. But I would think this one is like close to the peak. And if it's not, then, that would suck. Okay, Chipotle earnings. Did we get it? Yeah, so the company reported, let's share this right here on Chipotle. Amit, you said they cut down ad payments to creators. Wouldn't that prop up Google's rev as they're taking money out of creators' pockets instead of theirs? No, so the way Google YouTube ad revenue works is 55% of it goes to the creator, 45% goes to the company, Google. So it's not that they're it's not that they're cutting down ad payments to creators. It's that some creators aren't getting the same level of money per views that they were getting before. That has nothing to do with Google keeping the money. That has everything to do with supply and demand of ads. So if they were able to put up 7.32 billion, that just means, it was either more democratized in terms of how many creators were getting money instead of a bunch of people getting a lot of money, or the opposite. A lot more creators got money. So in the finance space, think your Meet Kevin soaked up a lot of the money versus, people like me that are probably not making obviously that much money as him. So it shows that even though ad CPMs and RPMs are going down, the overall collective revenue is not going down, and Google can't manipulate that because they literally take 45% of revenues. So that's interesting. It's really interesting. I thought YouTube growth was going to be a lot worse, just because of the fact that you would see people not making as much money, but that just means they've been doing a good job and it's been being dispersed as well. Revenue on Chipotle 2.21 billion versus 2.24. Earnings 9.3. Second quarter net income 259 million, 925 a share, up from 100. Okay, so this is, I think, what the street liked. They got about 80 million more in profit, which translated to 325 more share than last year. So, I mean, that's not bad. Net sales climbing 17% year over year, especially given, the people's spending habits, especially going down, not eating fast food anymore, all that type of stuff. So that's not bad. Only 39% of transactions during the quarter came from digital orders. And they've also made some announcements, right? Yeah, so they're approving an additional 300 million to repurchase shares of the company. Chipotle's projected same store sales growth in the mid to high single digits. Yeah, Chipotle did well. It's one of those stocks that boggles my mind. I'm like, why is this thing like 7? It's been treated like a tech company or something, but it's just not. Guessed investing in burritos was the play overall, right? I think so. Amit, you are awesome. Thank you, Daniel. I appreciate you. So let's get deeper into Microsoft. Let's see the updates. I want to know more about cloud, and I want to know more about. Here we go. Okay, we got some more stuff. Let's go. Let's get into this. So let's get deeper into the numbers on cloud. I am not an owner of Microsoft or Google yet. I'm thinking if I should. Right now it's counter to the moon. Microsoft's revenue increased 12% year over year in the quarter, compared with 18% in the previous quarter. So 12% year over year versus 18% year over year in the last quarter. That's not horrible in my opinion. Obviously that's down, but that's not down. That's crazy. Net income moved up to 2%. So they made 16 billion profits. Microsoft Intelligent Cloud segment with Azure, generated 20.9 billion. So out of the 51 billion, 20 out of that 50 billion was from Azure, compared to Google that did 69 billion and did 6.28 billion. That's where the growth of Google Cloud is, right? You're 6 over 69 versus 20 over 50. I mean, there's just a fundamentally disproportionate amount of possibilities in the context of Amazon or Microsoft versus Google with their cloud businesses, which is why people are so bullish on GCP. That was up 20% and below the consensus 21 billion. Okay, so they barely missed on Azure revenue as well. The company said revenue from Azure and other cloud services grew by 40% compared with 46. So that is down a little bit. Analysts surveyed expected 43.1. So they kind of met them in the middle, while the consensus estimate from the street was 43.4. Productivity and business processing segment, including Office and LinkedIn, posted 16 billion. Okay, so LinkedIn, Microsoft Office, and Dynamics posted $16 billion. LinkedIn is primarily ad revenue, along with what's the other part of LinkedIn? The paying for premium of like Salesforce and the Navigator for sales. Wow, not bad. Okay, 16 billion on LinkedIn. And then you have Xbox. This is the other thing I forget about Microsoft a lot when I think about it. Sometimes people think of it as a one-trick pony, but there's a lot to Microsoft. First of all, they own Bing. I know most people may not use Bing, but they also have MSN Network, which is like a ton of just ad revenue they generate from that. They have LinkedIn, a ton of ad revenue from that. They have Xbox, they have a ton of ad revenue from that. They're just buying the other gaming company. I forgot they were buying ABTI, ticker symbol, Blizzard Gaming, or Activision Blizzard. That's going to be additional revenue if that goes through. And then they have cloud. Like Microsoft is a real behemoth in terms of what they would do. And remember, the stock was flat for a good 10 years. Like it was a while where it just wasn't moving. And then finally in 2016, when Nadella took over, they started making a lot of more moves. So look right here. So the Bing search engine and Surface devices, along with Xbox, delivered 14 billion in revenue for the quarter. So Xbox, games, operating system, and Bing, 14 billion. Revenue was up 2% year over year. So not a lot of growth there, but at least they kept it intact. And I think that's all you could ask for in the type of macroeconomic environment that we are, is keeping it intact. Microsoft said search and news advertising, excluding traffic and acquisition costs, rose 18% thanks to stronger search volume and revenue per search. Still, a contradiction in advertising spending resulted in 100 million cut to revenue for the search and news advertising and LinkedIn category. So still, Microsoft is not Google, but they're putting up some decent amount of money just in the context of search revenue. On their own different types of platforms. Sales of Windows licenses to device makers fell by 2% in the quarter. Gartner said they had a 12.6% decrease in PC. Yeah, we know this because of the chip problems. They reduced their quarterly guidance. That's probably why they're down right now, because the quarter is not bad. It's likely just the reduction in the guidance, which makes sense, but also because of changing foreign exchange rates. Let's go back to stocks and let's see how they're performing on Webull. And let's discuss this. James says, "What's up, Amit? What's up, man? How are you doing?" Google at 108, MSFT at 250 or 249. Yeah, at the end of the day, it's not crashed. It did not crash. ARK is up 0.81% after hours. Bitcoin was at 29 this morning. If you were there in my morning live stream, it's barely moved at 28. Tesla is below 800 at 779. So the 850, it was so funny. There was this girl on Twitter who was like a Tesla bull, and she like took a picture of her going to get tequila shots or something, or like Mexican food to celebrate Tesla crossing 800s. And I'm like, that's like me saying, "Oh, Palantir is above $10. I need to go buy myself some jewelry or something." Like, no, like it's not going to stay up there. Like it's hard to imagine it would stay up there, just given this type of environment. You know, it's not saying you can't be happy when the stock moves up, but like to assume it's going to stay there with what's going on, it's a lot. So that's on Tesla. Peloton, 871, below $10 now at Peloton. Nvidia, 165. What else we got? Snapchat, 966. So it's interesting. Snapchat wasn't able to rise off of good Google news. Obviously, it doesn't affect Snapchat, but you would think there is some advertising revenue going on, which makes it better. Let's look how Meta's performing as a result of Google. So Meta is up 1.35%, 61. It is going to be very, very interesting to see what happens tomorrow. Again, $28.92 billion in revenue they've got to be able to get. Google not missing on their guideline means, you would assume Meta is okay, but we are going to see how it happens. Earnings were expected to miss. Who cares? These large caps are down like 40%. Why would the market keep selling? Well, that's the fundamental question, Michael. If the market is oversold and the RSIs, the relative strength indices kind of explain to us, just from a pure technical perspective, along with the intuitive, oh, they're down 40%, how much more could they be sold? That's what I think we were looking for. It's like, could this be sold off even more? Now, the intuitive response is no, it's very hard for it to be sold off more. But if it did get sold off more, you would assume things are bad. You would assume things are actually going bad, and that we're in a little bit more of a pickle. And the fact that that didn't happen, and the fact that the company has posted barely misses on their revenue and EPS means that things are okay, which kind of, Biden said we're not in a recession. And like, I think his argument is you got to let it play out, even though we're in a technical recession 2 quarters in, and obviously inflation is bad. But if inflation has peaked, and we have a lot of data saying that might happen, and earnings start to stabilize over the next 18 months, then we might technically not feel the worst of the recession. Texas Instruments. Yes, I forgot Texas Instruments came out, and then we'll talk about Meta for a bit. But Meta's doing well. Texas Instruments, they're up 3% as well. Let me go try to get their actual earnings. But Texas is up as well. Snap and Meta are more affected by iPhone changes as a pivot. Yeah, this is a good point. This is a great point, Miami Walking. Snap and Meta are more affected by iPhone than Google. Now, Google's affected by it, but because Google owns the search engine and the capabilities of searching, it's a lot more harder for like Apple to screw with them. You guys know how much Google pays Apple a year to be the default search engine? Put it in the chat if you don't. I feel like most people don't know this chat. Don't know this stat. Google pays Apple a lot of money to be the search engine, the default search engine for Apple. So let me know what you guys think. All right, let's open up Tesla, or not Tesla. What's the other thing called? Texas Instruments earnings. Let's open that up right here. Texas Instruments, for those who don't know, if you ever went to school, at least in the United States, they sell calculators. I mean, they build a lot of stuff, but calculators is the thing. Like whenever I was in school, bro, and I would pull up and I would like have to do a math problem that I don't know how to do. By the way, my mom's a math teacher, and like I still suck at math. I would take out a calculator, and that calculator was made by a company called Texas Instruments. Earnings per share of $2.45 versus the street estimate of $2.13, which is why they're up right now. $5.21 billion versus $4.58 billion from a year ago, last quarter. Not bad at all. They posted net income of $2.29 billion. Small 1.5% decline from their share price, but nothing too crazy. And 1.84 to 2.26 a share on revenue to 4.2 billion to 4.8. So their outlook is that they're going to be able to do 4.8 billion. So this is not bad at all. This is not bad at all for Texas Instruments either. This is actually pretty darn good, which is why we see it up in after hours. So the big companies, Google and Microsoft, did not really disappoint. Texas Instruments, everyone's still buying calculators to probably calculate how much they're down on their investments this year. That bar was fire. Tell me that bar was not fire. So Texas Instruments doing well as well. Safari's default, no, but Safari's not the default search engine. Safari is the browser. The default search engine when you type something into Safari is Google. Using my TI 130 right now. Yep. Got to go. Appreciate the grind as always. Thank you, Samuel, for being here. I appreciate you. So they pay Apple $15 billion per year to be the default search engine. $15 billion. Most people don't know that. That's what they do. So, you would think because Apple, they're not stupid, right? They could easily give search results to us with this little iPhone thing they created. And they sold up how many billions of these iPhones. They could control search. They could control ads. Now, granted, if they did that, you're talking about a monopoly on top of monopoly on top of monopoly. But nonetheless, because most people are not going to be that lazy to go click on another app. I don't know about you guys, but I use Safari all the time because I just don't care about the other browsers. I know some people do care, but a lot of people don't, right? Not the mainstream. So if Google wasn't the mainstream option, I would be getting search results from a different toll booth that essentially collects the advertising spend on top of that. So Google paying $15 billion is like a parking ticket to Apple to not have them. That's why I don't think Google ever wants to upset Apple, right? They compete with each other, but they have a very symbiotic relationship that works pretty well with each other at the end of the day, given what they're able to do together. Google's still up 3% after hours. Microsoft still down probably 1% after hours. Yeah. Overall, a very, very strong earnings. It was not fire. It was cringe king. Shout out to Tom being in the chat. Tell me that line wasn't fire, bro. That was a good lob. Great job dissecting the info. Thanks, Smith. Thank you, Rachel, for being here. Okay, last thing I want to talk about. You're still in the TI 83 Plus. Got to upgrade. Yeah, I've been there for a while. DuckDuckGo. Look, I don't use DuckDuckGo. I know some people do, but I'm just too lazy to use a different browser other than Chrome, which is why I ended up using that. Okay, so last thing I want to talk about now is earnings coming up in the next two big stocks, right? Which we have Meta and Apple. So first of all, let's go to Apple. Let's see how they are being affected. Apple at 151. Okay, Apple was at 129 at one point. Okay, so it was just a couple weeks ago where Apple was at 129, the S&P was at 360, and all hell was breaking loose. Things have gotten a lot better than that since the month of July. Historically, has always been a good month for stocks, just like if you look at the numbers from the past. Apple reported a Tom Brady-like quarter last quarter. I remember driving home from work when I still had a job. I don't have a job anymore because I'm starting a startup announcement coming tomorrow, July 27, 10 a.m. Eastern. Apple did an amazing job because they were able to show that even if people aren't buying their phones anymore, they have services. And because they have services that I think they did $20 billion in revenue and services last quarter, and they're expected to do something similar to that this quarter, they're able to monetize in a fundamentally different way. Services, which include things like health, things like Apple Music, things like the Apple Watch and Apple Fitness. There's all these different little subscriptions they can bundle together. This is actually why Spotify is suing the crap out of Apple, even though this was a year ago. I don't know if this lawsuit is still going on, for bundling Apple Music, which is $10 a month, or Spotify's $10 a month. Apple Music used to be $10 a month, but they bundled it for like 18 or $20 or $30 a month with all these other services. And Spotify's like, this is way too anti-competitive because you can't take the thing we're competing with at $10 a month and then become a loss leader for Apple Music, which is, I mean, there's not really a competitive difference in Spotify outside of the user experience and all that stuff. And then bring it in with all these other services, which is obviously a better deal. Consumers are going to pay a lot more than that, right? Or the consumers are going to be willing to pay for that versus something like a Spotify. So Apple has done a phenomenal job really changing their business into a services sector. Now, the key things I'm going to be looking at for Apple are as follows. Number one, the headset. What the hell is going on with the headset? Because we've seen all the rumors that the headset's coming out in early 2023. Is it actually coming out? And if the headset's coming out, there needs to be two things along with this. Are you creating the infrastructure from a software perspective, just like Apple did for the App Store in 2008, to allow developers to build on top of the Apple VR App Store? Probably going to be the case with version 1 of the headset. They're going to want to attack it from a multi-sided marketplace. They want to own the software and the hardware. The question is there any growth there? That is the question. Is there any growth? Did Google Cloud beat? No, they did not beat on revenue, but it was really, they missed by they did 6.2 billion and they were expected 6.41. So nothing too crazy. If Apple is going to control the hardware and the software of the metaverse, Apple has a massive growth opportunity, in my opinion, if the metaverse matters. Facebook is taking the bet that the metaverse literally matters because they're calling themselves Meta. Facebook also increased the Quest Oculus pricing today by 33% to $400 now. To me, that means there is less demand for the metaverse Oculus headset, because why would you increase prices if demand was steady? And if demand was steady, you might even think of reducing prices, right? Because you want massive scale adoption, especially if you're not even going to monetize the headset. Like a $200 headset, that's nothing. But the software, the advertising margins that Apple gets off its app store and Facebook will be able to get, that's going to be the whole next wave of computing. So you want more people to be able to buy this. When you increase the prices, it becomes harder for people to buy this. You only increase the prices if you can't maintain your margins or you can't break even, which means there's less demand for Facebook and the Oculus stuff. If that's the case, then that means Apple's push into the metaverse is skeptical at best to me. I do not believe people will spend hours upon their days in their life not using this, but using something they put on their head. I really am skeptical about that. And maybe, I think the gaming sector that'll work, maybe the fitness sector that'll work, but long term, I do not think that's going to work. So the second thing outside of that, if that's not going to be the big thing, is how much is the iPhone growing? And the iPhone's probably not going to be growing as much as we think it is, because everyone has an iPhone and they're waiting for the iPhone 14. So to imagine that in the past 6 months or 4 months, people bought a lot of iPhones, probably not. Now, they introduced a lot of products at their latest keynote, Worldwide Developers Conference, a lot of new Macs and stuff like that. But I don't think that's going to pull the needle to the 185 price target I think JP Morgan had on Apple. So then that brings back the question for the car. Now, don't expect the car to come up. I don't think they're going to talk about the car, but they have filed for some self-driving patents. That was released yesterday. It was leaked yesterday that Apple has filed for those patents, which means if that's the case, it's definitely on their radar. We know they're in talks with Hyundai and Kia Motors. Like, there's no way they're not talking about that stuff or not thinking about that stuff. Which means at the end of the day, I think that there is a world. Amazon's reporting the same day as Apple. Yes, also Roku that day as well, and Intel. I think there is a world in which Apple doesn't do the best on earnings if they're not able to meet their numbers. But if they're able to show the company's transitioning more into a services sector and less reliance on the hardware, then I think Apple has a chance. You got to remember also, at 180, it was a $3 trillion company. Like, for them to justifiably be a $3 trillion company in this market requires the macro to get better. It is that simple. You cannot expect Apple to just be a sitting alone $3 trillion company with inflation and CPI prints and Russia, Ukraine, and all this stuff happening, right? That's why in January it was kind of insane. And then obviously the euphoria went down. So we might be flat for a while because market's like, hey, it's not 180, but it's also not 129. Which means we're kind of stuck in this ping pong range. Now, then we've got Facebook, okay? This is the last thing I want to talk about, and then we'll be done for the live stream today. I think Facebook is in a very peculiar position. And the reason Facebook is in a peculiar position is because, and I don't know how much people keep up with this, but just think about it in the context of the actual platform itself. So Instagram is their main heavy driver. Now, they have not monetized WhatsApp as much as they could. As I say WhatsApp, ER Pro is in the chat saying, what's up, ER Pro? Thank you for being here. WhatsApp has 400 million monthly active users. They've just started rolling out a marketplace for merchants to be able to buy and sell things on WhatsApp, which is going to be phenomenal. And I think it's going to be really big in India, because India has one of the, India and Brazil are some of the largest countries that use WhatsApp. So I think global domination in the context of WhatsApp is an opportunity for growth for Facebook. The problem on Facebook is Instagram and the Facebook platform. I don't know how many people use it, but Instagram's starting to suck. Now, Instagram's starting to become more friendlier to creators. Why? Because creators need discovery for their content in order to come back to the platform. And if you get more people coming back to the platform, you can sell ads. In order to get people to come back to the platform, you need to compete with the thing that's taking your lunch, which is TikTok, which innovated the whole concept of algorithmic-based targeting of content in video format versus the social interest graph that Facebook and Twitter were building upon for the past decade. So now Facebook has quite explicitly, the head of Instagram, I watched the video of him coming out today saying, look, we think that creators need to get discovered. This is their way of spinning it. And we want to serve you things that show your interest. So if you care about basketball, you are more likely to get basketball Instagram Reels, which is their competitor to TikToks, in your feed, even if you don't follow those people. That is an entertainment platform, not a social interest graph platform. Now, here's what happened yesterday, and I'm sure a lot of you don't know this if you didn't follow Instagram. I'm going to show it to you right now. This is something that I think is bad news for Instagram. Let me see if it's still even online. Is it online? It's not. Is it here? Okay, it's not on here. I was going to show you guys a story of Kylie Jenner, who posted on her Instagram story, basically saying, make Instagram again. Stop trying to compete with TikTok. So when you have someone who has 250 million followers, one of the most highly followed accounts on your platform, saying, hey, your platform is starting to suck. Remember, Kylie did this in 2018 with Snapchat when she said, who uses Snapchat stories anymore? Everyone uses Instagram stories. And Snapchat stock fell like $2 billion in market cap that day and it's kind of at the same price now a couple years later, simply because one of the biggest users doesn't like using the platform. Now, in the context of Facebook, if people on Instagram do not feel that the platform is valuable to them and it's more turning into an entertainment platform versus a platform in which they would be able to access their things about their friends, then the use of Instagram, the use of Facebook is fundamentally changing. And it's not just Instagram, because Facebook, the platform itself, came out today and said the actual feed on Facebook, where you get a bunch of articles and your friends getting married and all this shit, that's going to turn into video. That is the argument they're making, which is great for content creators, I believe, because it means more opportunity to get discovery. But in terms of the user experience, I don't know if that's what everyone wants. And YouTube Shorts is trying to, like, everyone's trying to do this TikTok model, and it just might not work. Now, Facebook's doing this because they had 1.95 billion DAUs go down to 1.93. We're going to be very interested to see if that goes down even more. Zuck said this is the worst economic downturn we've ever had in the past 10 years, which means he might be seeing ad spend go down, or he's preparing for things to get bad after earnings if they've seen DAUs go down. And the shift to video seems to be that they're losing engagement on their core platforms to TikTok, which means if that's the case, they have to do something to shift their engagement, right? Like, you can't survive as a platform if you don't shift. Which means I think Facebook may be in a different world if they decide to do that, and they may have to be valued differently. Now, the bull case on Facebook, there's 10 million advertisers on it. Where are you going to go advertise your product other than Facebook or Google, right? Because they have the targeting features. Now, obviously, that can go to TikTok. TikTok did about 12 billion in revenue last year, which is 3 times more than Snapchat and Twitter combined. But the problem is, it's difficult to just assume billions of people will stop using those two things and go all to TikTok, especially when they use those two things for connecting with their friends. Now, if those platforms turn into entertainment platforms and not connectivity platforms, then maybe Facebook competes, or maybe people are like, hey, I don't even want Facebook for that, so I'm just going to use TikTok. And that actually hinders them even more. We're going to see what happens. It's going to be incredibly interesting to see how this plays out. But I think earnings for Facebook are going to be really, really interesting as well. Spotify also does earnings tomorrow. Let's look at Spotify stock right now. We can talk a little bit about Spotify, and then I'll probably end it out. Spotify's at 103, it's at 104, up 0.2% in the after hours. Now, here's my thing on Spotify. I think I've been very vocal about my thoughts on Spotify and what problems I think I see they have. I think of them more so as a Netflix when it comes to audio content. They are losing a lot of money because of their podcast acquisitions. And because of that, they're not that profitable. And they spent upwards of $800 million on premium audio content. Along with the fact that record labels and musicians, right, a lot of the royalties is not good. And even if they increase their royalty rates, that's going to be bad for, or artists have to get paid more of that within their contract. So it's a really interesting business because you have to bet on, like, here's the thing. You have to bet, just like you bet on Netflix, that they would acquire all this content and they would figure out monetization later. Netflix was able to do that. Netflix became profitable, but Netflix went from 700 to 150. And why did that happen? Because once growth slows down, it doesn't matter if you're profitable, you're not growing. And that's the issue. So if you're not growing, it's going to be difficult. So in the context of Spotify, they had 180 million premium subscribers Q4 2021. They had 182 Q1 2022. That's an increase of 2% in 2 million subscribers in quarter to quarter, which is a growth of 1 or 2%. That's not really that good, right? So how many more millions of paid subscribers can they put up? And if they can do that, how much can they convince investors that says, look, we know we're not profitable yet, but we're going to be able to get to that profit eventually as long as you allow us to keep accumulating content and be able to grow long-term into the world's biggest audio network? That's going to be the question that we're going to be able to see. Alphabet CFO says they're investing in short-form videos are taking over. Yes, so here's another big thing about Google and YouTube, and this is the problem I have with YouTube as well. I don't know how much you guys are noticing this, but in my recommended, I'm getting a bunch of shorts. I don't give a crap about shorts on YouTube. Like, I'm not on YouTube to watch shorts. I genuinely hate shorts on the platform because it's not interesting. I go to TikTok for that stuff. So YouTube now is seeing the lion's share of their engagement go to TikTok as well when it comes to short form video. They are going to be playing in a different world to promote this type of content as well. For creators, it's good because they know if they promote more shorts, they might get discovered. But from a platform perspective, it's a little bit weird muddling up the platform and putting up all this different stuff. Netflix also lost a lot of control of a lot of content. Yeah, I think that agrees well. Netflix was an aggregator for content, right? Friends, The Office, all that stuff. That stuff started to go away once they created original content because the major streaming networks took their content. So in the context of Spotify, right? Like, what if Joe Rogan leaves after next year? Like, how many people will just leave? That's the question to me. And that's the problem I have versus YouTube. Joe Rogan left and no one left YouTube. Like, because YouTube is YouTube. There's the beautiful thing about a website that has user-generated content is anyone can pop up and anyone can get discovered. And it's this beautiful form of finding new things that you're interested for by searching for them, all that type of stuff. But when it's premium audio, premium shows, it's just a hard position for me to invest and be like, yeah, you guys are going to be fine. If Joe Rogan leaves because he wants to get independent, he got 100 million and he wants to go back to YouTube in 2 years, which things happen, right? You don't know if Joe Rogan's happy at Spotify. Maybe he's not. I mean, you've lost 12, 13 million people that use your app every day just to listen to Joe Rogan. And where are they going to go? Wherever Joe Rogan went. Whereas if the platform has a moat, meaning anyone can leave, they don't care, then the platform is successful independent of anybody else. And the platform becomes incredibly valuable. But if Taylor Swift or Justin Bieber leaves tomorrow, Spotify is nothing because millions of people will leave because they care about Taylor Swift and Justin Bieber's music. So that's going to be interesting to see what happens on Spotify's earnings, and we'll ultimately check out what goes there. So Apple at 150, Meta 159, Google 105. We are going to see what happens. I think that is the end of the live stream. Thank you, 200 people, for being here. I will do a late night stock talk tonight. It is a little bit of a pre-celebration for my July 27th announcement. I'm announcing my startup to the world tomorrow. So for anyone who's just discovering this channel, I hope you join me 9:45 a.m. Eastern tomorrow. It's going to be an exciting time introducing a new product to the market. We are trying to compete with the big dogs, the big technology companies. And I'm very excited to see if we're going to be able to pull off what I think we're going to be able to pull off and see what happens. So thank you all. I will be late night live streaming tonight at around 10 or 11 p.m. So watch out for that. And thank you all for being here. I will see you later today. Bye-bye, everybody.